and beyond 3 years, and complete neonatal and pediatric care, including pediatric surgery. The hospital also provides 24/7 pediatric and maternal emergency services. The 49-bed specialized hospital is strategically located in Whitefield, Bangalore, and is designed to provide personalized medical care in a calm, soothing, nature-inspired environment. The hospital has the most advanced technology and is well equipped with birthing suite, labor delivery rooms, modular operation theaters, single and deluxe suites for comfort of the mother and baby. It's our specialty hospital in Bangalore, which shall be further developed, adding 2 more blocks as we go forward. We continue to be committed to our expansion in India and see a strong potential for growth. In order to widen our healthcare offerings for our patient base, we are actively expanding Aster labs and the pharmacy distribution network in India. This is in line with the strategy to have wider presence with an asset-light model. Also, digital transformation initiatives creating various revenue streams shall be our focus in the coming years. Aster Volunteers, our division which helps people who are in need, has signed a MOU with Al-Shifa Hospital, multi-specialty hospital in New Delhi, to help set up a 50-bed field hospital to meet the increasing shortage of hospital beds during the COVID-19 pandemic. The initiative is aimed at supporting patients who are financially disadvantaged yet in need of critical care. As part of the MOU, Aster will be supporting the development of the medical facilities and ensure that the necessary infrastructure is in place, while Al-Shifa would be responsible for operating the hospital. We have started such measures later also in other places, that's in Kerala, in Kochi, Calicut, etc. We are actively working towards creating our global tie-ups and leveraging the same across the group. Recently, we have signed an MOU with Roche Middle East, the world leader in biotechnology, as a strategic partner across United Arab Emirates, the Kingdom of Saudi Arabia, Qatar and Oman. The partnership will enable Aster DM Healthcare hospitals, clinics and laboratories across the region to adopt the latest diagnostic innovations and solutions to support doctors in providing optimal treatment solutions to their patients. This is part of our core strategy to introduce smart systems and encourage early and accurate detection that can facilitate timely medical intervention essential to prevent unwanted disease outcomes. We continue to be committed to our healthcare heroes who relentlessly work to save lives and often have risked their own lives in the line of duty. We have announced a 10-year salary support for families of employees who died of COVID-19. This will be applicable to all employees of Aster in India and Gcc who lost their lives due to COVID-19 or those who may succumb, God forbid, to the disease in future. Around 5,000 employees of Aster have been infected with the virus since the start of the pandemic. While most of the infected are back to work to continue the battle, 4 of them have succumbed to the virus. They have sadly left behind young families with wives, children and aging parents. The Asterians are irreplaceable and they will always remain close to our hearts. We are focused on guarding our employees against the COVID-19. And I'm happy to say that we have ensured that 84% of our employees across the globe are now fully vaccinated. During the fourth quarter, we posted a revenue of 2,391 crores, which is an increase of 7% compared to previous quarter and an increase of 5% when compared to the same period last financial year. The EBITDA is in quarter 4 was 336 crores, an increase of 2% when compared to previous quarter and a decrease of 17% compared to the same period last financial year. The profit after tax post NCI for Q4 was 105 crores, an increase of 14% when compared to previous quarter and a decrease of 20% compared with the same period last financial year. I now request Deputy Managing Director, who also heads the digital transformation, to take you through the initiatives being taken by the company, after which Srinath Reddy, our CFO, shall be briefing you and giving you more details regarding the financials. Thank you very much.
Thank you, Chairman. Good morning, everyone. At Aster, we do recognize the fact that digital is really the way to further our mission of healthcare and wellness. Our outreach for patient care is restricted right now to the hospital, clinic, labs, and pharmacies we have. We want to break these barriers and create an omnipresent model of clicks and bricks. We are working actively towards creating digital assets which are foundational, efficient, and can help us expand quickly in an asset-light model. We're investing in creating an app, One Aster, which will be our unified mode of engagement with our patient base for their wellness. It shall house teleconsult, e-pharmacies, chronic disease management, and creating various streams to support patient wellness and well-being. Organizationally, we are committed to drive this across the board, and we have taken initial few steps over the last 6 months. We also saw expenses of approximately 11.5 crores in our P&L during the quarter, which is our investment for a better future. We are hopeful that we shall be doing the soft launch of this app in GCC in Q2 of FY22, and by the end of financial year, we shall have this rolled across India as well. I now request our Group CFO, Srinath Reddy, to take you through the details of the financial and segmental performance for the quarter and the financial year. Thank you.
Thank you, Anisha. Good morning, everyone. As Doctor mentioned, the threat from COVID is not over, but the vaccination rollout all over the world is happening at a record pace. This gives hope to everyone that we shall soon have this threat behind us. During Q4, there was a second wave in GCC, which had an impact on our business. During the same period, India did fairly well. In spite of the second wave of COVID in GCC, we were able to perform better in Q4 compared to quarter 3. For Q4, I request people to put the mics on mute. Yeah, thank you. For Q4 FY21, our revenue from operations has increased to rupees 2,391 crores compared to FY21 Q3 revenue of rupees 2,228 crores. On a year-on-year basis, revenue increased by 5% and corresponding constant currency increases 4%. The revenues in GCC has increased by 2%, and in India, the revenues have increased by 20% year-on-year. Our India operations saw increase in both in inpatient and outpatient visits. In Q4 FY21, we have reported EBITDA of rupees 336 crore, which is 2% higher than the previous quarter of rupees 328 crore, but a 17% decline on a year-on-year basis. In constant currency terms, the decline is 18%. EBITDA margin in Q4 FY21 was 14% against 17.7% in Q4 FY20, a reduction of around 370 basis points. PAT post NCI decreased by 20% to rupees 105 crore as compared to rupees 131 crore in quarter 4 FY20. The reduction in EBITDA numbers in quarter 4 FY21 is largely on account of revenue mix changes in GCC. Our pharmacy vertical saw revenue shrinkage over last year owing to lesser footfalls in UAE and lockdowns in Oman, Qatar and Saudi, including frequent travel bans imposed by the state. Coming to 12 months performance for the year ended March 21, revenue from operations for FY21 decreased by 0.5% year-on-year to rupees 8,608 crore from rupees 8,652 crore. This is largely emanating from a weak first quarter of the financial year on account of COVID, and for the following quarters, recurring COVID impact in terms between GCC and India. EBITDA decreased by 14% from rupees 1,258 crore in FY20 to rupees 1,077 crore in FY21. PAT post NCI decreased by 47% from rupees 277 crore in FY20 to rupees 148 crore in FY21. The constant currency decline for revenue, EBITDA and PAT for 12 months is 4%, 18% and 50% respectively. Coming to the segmental performance for the quarter, the GCC Hospital Revenue has increased by 5% from rupees 785 crore in quarter 4 FY20 to rupees 826 crore in quarter 4 FY21. EBITDA decreased by 6% on a year-on-year basis to rupees 156 crore in Q4 FY21. The EBITDA margin decreased from 21.3% in Q4 FY20 to 18.9% in Q4 FY21 on account of change in case mix and increased material cost. Revenue in GCC clinics is at rupees 587 crore in Q4 FY21 compared to rupees 521 crore in Q4 FY20, an increase of 13%. This is also better over last quarter by 9.5%. EBITDA was at rupees 115 crore in Q4 FY21 compared to rupees 121 crore in Q4 FY20. The EBITDA margin decreased to 19.6% compared to 23.2% in the previous financial year. The reason for the decrease in margin is due to the reduction of the regular clinical activity with a corresponding higher cost on account of the fixed expenses and outsourced lab expenses. For pharmacies in GCC, revenue is at rupees 559 crore in Q4 FY21 compared to rupees 644 crore in Q4 FY20. EBITDA has decreased from rupees 126 crore in Q4 FY20 to rupees 67 crore in Q4 FY21, and the EBITDA margin decreased from 19.6% in Q4 FY20 to 11.9% in Q4 FY21. The drop in margins is mainly due to the reduction in footfall and underachievement of revenues resulting in lower rebates. Coming to the balance sheet, the group net debt stands at rupees 2004 crore as at 31st March 2021 compared to rupees 2783 crore as at 31st March 2020, which is a reduction of 779 crore. We have been reducing our debt exposure steadily. The breakup of net debt: India stands at rupees 306 crore compared to rupees 358 crore as at 31st March 2020, and GCC net debt stands at $231 million compared to $324 million as at 31st March 2020. CapEx during the 12-month period was rupees 374 crore. Considering that in the GCC, significant part of the population have been vaccinated and our facilities in India are approaching a mature state, we have a positive outlook for the next financial year. On that note, I conclude my opening remarks. We would be happy to view you our perspective on any questions that you may have. I now request the operator on this call to open the question and answer session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Sriram Rathi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So firstly, this laboratory outsourcing charges seems to be significantly higher this quarter. Versus of course YY and also QOQ it has doubled. So, what exactly has led to this? If you can just give some more idea about this particular item.
Yeah. So Sriram, see, like what we said in Q4, we had wave 2, right? So whenever the COVID number increases, there is an increase in the RT-PCR testing, right? So these testing are directly linked to the number of COVID infections. So therefore, we had significant numbers of RT-PCR testing done, and for which there was an associated cost. We do have in-house, but that is not sufficient for us to cater to the demands of the testing requirement. So we had to outsource, and which we are doing outsourcing in the past as well. But this quarter being wave 2, the numbers are significant.
Okay, got it, sir. So basically, going forward, as the cases go down and the patients from COVID patients go down, so this amount should again normalize.
That's right.
Okay.
So now, if you look at extending my explanation, the thing is that now COVID wave 2, right, has decreased. It's very, very minimal in most of the GCC region. But however, we are seeing increased numbers in India. No doubt, during the last couple of weeks, even India has seen reduced numbers. So when this reduces, the regular business comes back to some extent, and the COVID testing goes down.
Okay. And last part of this will be for the GCC region only, right? This quarter.
Yeah, this is mainly for the GCC region. In India, we have got our own lab testing facility. And in fact, that is a separate line of activity, and which was established during the last financial year. And this financial year, we will scale up the lab business in India.
Okay, got it. And secondly, on the vaccination, I mean, are we participating in this opportunity of vaccinating patients? And I mean, any details if you can provide in terms of if there can be some upside on the numbers?
Yeah. So regarding vaccination, we are very actively participating in this opportunity. Unfortunately, in India, there are a lot of restrictions for getting the vaccine for the private sector companies. In GCC also, GCC there is no revenues involved. This is being given free of cost. So we have to provide this to the patients free of cost. It's provided by the government in the UAE. Whereas in India, you can charge the administration fee, but there are a lot of restrictions. So even though we are very actively involved and want to do it more and more, there are restrictions in getting the supply. But we are trying very hard to get more and more stock and provide it to as many people as possible. Not even as a business. It is more like, it is very important that we control this pandemic through doing the vaccination to the maximum number of people.
Okay, got it. That's helpful, sir. And lastly, I mean, if you can just provide some details in terms of our expansion plan now, because I think in FY21 we have not done much. In FY22, how should we look at in India and GCC? And also any update on the Cayman Islands, the multi-specialty hospital plan that we had?
Yeah. So regarding the expansion, we have 2 hospitals which are getting ready in UAE, which was slowed down, but we have now maybe in the next 2 quarters we should be able to start both these hospitals. One is in Sharjah, which is a greenfield hospital, 80-bed hospital, which we hope that in the Q2 of financial year 22 we'll be able to start. And in Muscat, Oman, we have another greenfield hospital, which is 145-bed hospital, which is again we hope that in Q4 of financial year we'll be able to start that. Both these are leased facilities, whereas we have an own facility in Sanat Hospital, Riyadh, a 69-bed hospital. This is put on temporary hold and we have not proceeded with that, and these are the GCC projects. In India, the Aster Hospital, which is in Kolhapur, Maharashtra, there is an expansion going on, which is a 60-bed hospital, which we will have, the construction is going on, and we hope that by Q2 of financial year, we should be able to complete that. It's our own facility. And we have actually another construction going on, the one which I mentioned in my speech, the phase 2 of the Aster Whitefield Women and Children Hospital. Not only women and children, it is actually other specialties. This is going on. And we hope that by 2023, the next financial year, we'll be able to complete that. So these are the projects which were in pipeline, which we have put on hold, and now we haven't started anything new. In fact, the hospital which we announced earlier in Chennai and Bangalore, another hospital in Bangalore, we have put this on hold.
Okay.
Yeah.
Yeah. Yes, sir.
So in terms of numbers, capex for the current year was 374 crore, right? And for FY22, we are looking at 580 crore of capex. During the COVID year, we went a little bit slow. Our focus was not to take up new projects, but in the current year, the uncompleted projects we are moving very fast, and that will increase our capex because, like what Doctor said, we have got projects coming up in Bangalore, Kolhapur, similarly at Oman, and at Dubai, Sharjah. So therefore, the total capex outlay estimated is 580 crore for the coming financial year.
Okay, sure.
So one of the things which you will notice is that there is significant reduction in our debt, which has come down by some 780 crores of rupees for GCC and India together. So part of this has been because we have put some of the projects on hold, but also because of the prudent financial management which has been done. So there is a significant reduction in the debt which has happened during this period, financial year.
Right. Okay. Any update on Cayman Islands plan?
Yeah, Alisha, you would like to mention about Cayman Islands?
Chairman, Alisha is offline right now. Her phone got disconnected.
Okay. So I can speak about that. So Cayman Island, we have got the approval from the authorities there, the PAD approval. This is the Planned Area Development approval for the hospital building. The land is now getting ready for backfilling, which will take about 3 months. Meanwhile, we are negotiating with the contractors for getting on boarded. So we hope that in 2 years' time, we should be able to start the hospital. So that's the status, and we are quite, excited because it's not only the Cayman, which is a small country, but there is opportunity to get business from the surrounding areas. That's the whole plan, from the Caribbean as well as from the US and all.
Okay, sure. That's helpful, sir. Thank you so much.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you for taking my question and good morning. Just the first one on the outlook. You said you have a positive outlook for fiscal 22. So just want to understand from a 1Q perspective, how is the GCC in terms of occupancies? Has it improved from the 49% or so, given that the COVID wave has kind of eased there? And also the outbound restrictions you also talked about, which impacted in 4Q, maybe in 3Q as well. Just want to see how that is panning out and how things are improving in the GCC.
Yeah. So, see, GCC generally it's looking up because the vaccination has definitely given a lot of confidence to people and to the authorities. And we hope that with 70% of the people being covered in UAE and even in other GCC countries, we will be seeing opening up as well as most of the restrictions being lifted. So this will help in the people coming back as well as the existing people. I mean, the people who are already here taking up many of the things which they have postponed. As well as even there are other opportunities. The country where we are mostly having this is UAE. We have the Expo 2020 coming up, and which is only 3 months away. So overall, there is a positive feeling, but we can't say. See, it has been unpredictable. COVID always has been unpredictable, but we feel it little more better than what it was last year. And one good thing which has happened is that even when we look at the first wave which happened and the way in which we managed that in India as well as GCC, it has been slightly better from the financial point of view as well as from the point of view of the overall operations when we look at the second wave which we addressed. So we think that we are also learning and we will be able to do it better as we go forward.
Doctor, anything in terms of occupancy? Yeah, go ahead.
Yeah, so Shyam also, occupancy is improving. So that is something which is good. Only at this point of concern is on the retail side, but we expect the retail pharmacy side. But we expect that also to improve. But it could take some couple of quarters to see an improvement on the pharmacy front. Coming to India, India is something we are positive. The reason is that many of our facilities now are reaching a mature state. So therefore, both from the top line as well as the EBITDA contribution, India should be doing significantly well compared to last year. Dr. Hari, you would like to add something there?
Yeah, thank you, Shyam. So like Dr. Azad has mentioned, a lot of lessons what we learned with our experience in 2020, the first wave. The clinical teams are now fairly equipped. Infrastructure has always been robust because all the hospitals in India of ours has been NABH accredited. We also have a good control over the supply chain situation, which we had some challenges last year. Overall, we also feel that see, one big thing about the India hospitals, which Dr. Azad also mentioned, is the extensive coverage of vaccination of healthcare workers. That has been really good, and it has given the team a lot of confidence. And when we looked at the second wave in our hospitals, even though the COVID numbers were quite significant, in terms of business footfalls, it has been very positive when you compare the same time last year when we had the impact of the lockdown. And we are expecting a rebound of elective non-COVID cases as the lockdown is eased in all the states that we operate. So we are bullish for this year.
Got it. Thanks for all those comments. Srinath, just one on trying to get clarity on the GCC pharmacy margins. You mentioned two reasons, reduction in footfall and lower rebates. Can you explain the second one, please?
Yeah. So, see, there are certain targets of revenues when we achieve, we are entitled for certain rebate, right? When the footfalls drop, revenues get impacted, and in turn, we get a reduction in the rebate. Now, this rebate, whatever we get, these are incentives, right? So, whatever we get, that 100% of that generally flows into the bottom line. So, when the revenue doesn't meet up, so we get hit a little bit higher at the bottom line, mainly because this rebates get reduced, which otherwise would have flown completely to the bottom line.
Got it.
Sam, I just wanted to add here. So there has been a change in the mix of the disease profile also. What is happening is that as people are mostly staying home and people don't have, it's a good thing, they don't have much of infections and all. So the mix of the medicines and all is more towards chronic medication, which has got much lower margin when compared to antibiotics and other things which are required for acute infections and all. So even that might have played a role in reduction of the margin.
Got it. Helpful. My last question is on the EBITDA margin profile, how we should look at it going forward. We have multiple hospitals starting up. So is there a worry or a concern that, there could be dilution in margins as these new hospitals, both in GCC and the mother and child in Bangalore, actually ramp up? How should we think about margins of fiscal 22?
Yeah. So the margins, even though the new facilities are starting, right, both in India as well as in the GCC, but these facilities will be a little bit later during the year. So one of the facilities is expected at the last quarter of this year, that is the Oman facility, which will not have much of an impact on the financials. Similarly, the hospital at Sharjah is expected somewhere to start in the month of August or September. And the impact of that will be very minimal. No doubt it will, initial period, there will be losses, but we don't see that impacting the overall hospital margins because we are bringing in efficiencies in other places. And therefore, for the current year, we will be looking at similar margins on the hospital side. Similarly, on India, even though there's a new facility which is coming up, that will not have any dent in the margins. In fact, on India as a whole, the margins will improve significantly, mainly for the reason, like what I said, many of these hospitals are now getting into that mature state.
Got it. Thank you and all the best.
Thank you. The next question is from the line of Charulata Gaidhani from Dalal & Broacha. Please go ahead.
Yeah, can you throw some light on your plans in Cayman Islands?
Yeah. So, see, in Cayman Island, it is a 150-bed hospital which is being started with a multi-specialty hospital with focus on 3-4 specialties. So, we have taken a concession agreement from the government and have bought 40 acres of land there. And this plan has been prepared and it has been approved by the government. So the plan is to have, of course, the local population require hospital facilities. There is a good hospital by an Indian player there already, but there is a gap. They are not providing all the areas which are required. So we'll be filling that gap, as well as we are expecting, more importantly, patients coming from the US as well as other Caribbean countries, that is the surrounding areas. Now, the advantage that a player like us has when compared to any player in US or in that region is that we are allowed, as per the agreement, to bring in doctors and staff from countries like India, so that the cost of our HR cost will be much lower when compared to hospitals there. So even if we do it at double the price of what we are doing here, it will be much less when compared to what is available to the people there. So our cost will be lower, and this will attract patients from the US and all to this facility for medical value travel. So we hope that we will be able to do well, and we are looking at areas where we can get such patients, like for elective surgeries, for cosmetic procedures, as well as, of course, the mainstream areas.
Okay. What is the kind of treatment focus that you would have?
The treatment focus, yeah. So apart from the mainstream facilities like the cardiology, neurology, orthopedics and all, which any hospital should have, we also are looking very actively on oncology. We are having an oncology, comprehensive oncology plan in the new hospital, which is built into that, as well as a major plan into the area of wellness. All wellness-related cosmetic surgeries, as well as other dermatological and the cosmetic procedures. So that will be another area where we can get large number of patients from the other countries around.
Ms. Kedani, do you have any further questions?
Hello.
Yeah.
Yeah. And by when will this hospital be commissioned?
We hope that we'll be able to start it in 2 years' time.
In 2 years, okay. So FY24.
Yeah, maybe around 23, end of 23 or 24.
Okay. Okay, fine. Yeah, thanks.
Thank you.
Thank you. The next question is from the line of Shashank Krishnakumar from JM Financial. Please go ahead.
Hi, thanks for taking my question. So this is on the India hospitals EBITDA margin. It has declined sequentially. So is it because of Aster Labs, or is there something specific that you'd like to call out?
So, Dr. Harish, you want to just take that question?
Shashank, can you repeat that?
Yeah. So this is on the India hospitals EBITDA margin, which has declined sequentially. So is it because of
Sure.
or is that something?
No. I'll explain that. So when you look at quarter 3 to quarter 4, the main thing is like it was already explained by the speakers before. We had commissioned the Aster Women and Child Hospital in quarter 4 in Whitefield, Bangalore. So that is the primary reason for the dilution of EBITDA margin in quarter 4. And there has been also slight increase in facility maintenance elsewhere too. These are the two main factors.
Okay, got it. And secondly, on the home healthcare and the pharmacy business in India, we earlier talked about brand licensing agreements or the acquisition of wholesale entities. So any update on that front?
You're asking with regards to India?
Yeah, India pharmacy.
Yeah, so I'll answer that. Yeah. So the thing is that, what was mentioned a bit earlier by Doctor, so these two businesses, one is the lab, which we will be scaling up, which is well established now. Now is the time for us to scale it up aggressively, which we would do in the current year. And the other line of business activity is the pharmacy distribution network. So that is something which already I think there are 17 units which have been started and which we have got an arrangement. And we would like to expand this distribution network, which will be another business activity, catering mainly to the customers. At this point of time, we are not getting into online, but in future, there is a possibility that we will also get into online. Dr. Harish, you would like to add on that pharmacy distribution network?
Yeah, so like already mentioned, right, we are focusing on the geographies where we are, and we have brand licensing agreement. So the brand obviously is Aster Pharmacy, but we are where the main entity is looking at. We are basically looking at the distribution end. We feel that it will bring in a lot of synergies both at the distribution and also for the hospital procurement side. So as of right now, we are focusing on clusters. Cluster A is Karnataka. Cluster B would be the state of Kerala. We will slowly enter Telangana. So that's going as per our plans. And like rightly mentioned, we need to have some sufficient base in terms of brick and mortar before we leverage an omni-channel network.
Okay, thank you. That's it.
Thank you. The next question is from the line of Ayush Bansali from Allegro Capital. Please go ahead.
Hi. You had mentioned the capex for FY21 as 320 and 580 crores. Would you be able to guide us on the India numbers, please?
So just a second. India numbers. Yeah, we are looking at around 280 crores in India.
280 crores. And what would be your capital employed for the India business?
See, out of the total capital employed, 40% of the total capital employed is India and 60% is in Gcc.
Okay. Understood. And just one more question. I know you have reclassified your material cost in GCC from revenue to material cost. What would be the like-to-like number as you had stated in historicals for Q4 number for the Q4 period?
So after the reclassification, it is like-to-like, right?
No, my question was, let's say it would be higher in Q4 because of the reclassification, right? Because earlier you had clubbed discounts, you had reduced discounts from revenue. So if you still continue doing that, what would be the number? That was the question.
So that would have been it would have been an increase of 50 crores.
50 crores. Okay, understood. Okay, that's all. Thank you.
Thank you. The next question is from the line of Mehul Seth from Axis Capital. Please go ahead. Mehul Seth from Axis Capital, please unmute the line from your side and proceed.
Hello, am I audible now?
Yes, you are. Thank you.
Yeah, thank you for the opportunity. First question is related to your GCC business. Can you highlight on your performance related to your home care business of Vahat? What was the performance over last say since its acquisition? And also in same in GCC part 2 question, your new hospital EBITDA margin has improved significantly even on a sequential basis. So what is driving this growth for the company?
So Amitabh, do you want to take that question on Vahat?
Sure, Mr. Chairman.
You are there?
Yeah, I'm there, Mr. Chairman. So, in the case of the Vahat acquisition, we have seen a significant increase in terms of the volumes and revenue. This acquisition of ours has turned out to be a good acquisition. We have seen gross margins upward of almost 28-30% on this, and the revenues have been steadily growing on this one.
Okay, and the driver for the new hospital margins, it's improved significantly.
So in the case of the new hospital margins, we have Fidas Hospital that that was commissioned last year. We will see that we've seen better occupancy on that between Q3, Q4, at least as the electives were allowed to be opened. We saw better occupancy as well as in the case of a Mankoon hospital, which is the other hospital we have, we have seen better margins there.
Yeah. So let me come in here. So in the case of new hospital, one of the hospital over there is the Gcc Hospital, which is in Dubai, right? So that hospital, being within Dubai, has done extremely well. So therefore, over there, the margins are higher. But during the quarter, in other places, if you look at the existing hospitals, some of them didn't do that very well, mainly because of the COVID. But over here in the GCC, especially in the Dubai, the hospitals which are less than 3 years, mainly the Gcc Hospital, has done very well. So that is the reason why the margins there are higher.
So basically, it's nothing to relate with the vaccination that you are maybe giving through these hospitals. The margin driver for them.
No, it's not vaccination. So Srinath, the question is that it's not because of the vaccination, because vaccination is free in GCC. So this is not because of the vaccination.
And one question related to your working capital cycle that has improved in FY21. This is largely because of there is a reduction in the receivable days for you. So how do you see this going forward? Means it is sustainable, or once the Saudi business will again get into normalized phase, then again there is a increase in receivable and there will be a stretch in the working capital cycle?
Yeah. So in terms of days, there will be a slight increase because this time you are seeing a small reduction. That is mainly because in terms of business that we had due to COVID, mainly on the RT-PCR testing, it is cash business. But once things normalize, these numbers will slightly go up, but we are trying to keep it around those numbers.
Okay. And one question related to your contribution from your COVID-related patient, means COVID-related revenue in your overall, say in GCC and in India, how COVID is contributed to your revenue?
Yeah, so at least in terms of in the GCC, mainly COVID revenue comes from the clinics. No doubt, it is there even in the hospitals when government refers the patient. So coming to the clinics, so around 30% during the COVID time. It all depends on how long that business is there, in the sense that the COVID lasts. So roughly, in terms of clinics, around close to 30% of the revenue comes from COVID related activity. And in the hospitals, that is it all depends upon how long the government restricts our elective cases. And generally during the quarter, if you see hospitals had around, say, it could be around 10 to 15% of COVID. Dr. Harish, you would like to answer? In India, it could be slightly higher, right?
Yeah, so it was quite interesting because Q1 we had no COVID at all. It was zero. Q2 was the highest exposure to COVID. That's about 14.6%. Q3 again, the caseload came down, and Q4 was the least. So if you look at console for the whole fiscal, it was about 8% roughly.
In Q1 FY21, the starting of this early 2 months, there will be an increase in the COVID revenue because of this increasing number, especially in India.
Yes, that is quite. We had a pretty severe second wave, so all our hospitals in India were affected. So that is quite expected, and we are just coming out of that right now. So the worst hit month was May. June is obviously much better, and with this lockdowns being phased out, we think that July things will be far better. So even on year, in spite of these COVID challenges, the business performance has been very good for India hospitals.
Yeah, I was.
So let me see, if you look at on a consolidated basis for the quarter, that includes even clinics, hospitals and everything, both across the geographies. 20% of the business is from COVID. Like what I said, clinics will have 30%, hospitals will have lesser. On a consolidated basis for the quarter, 20% is from COVID.
And just one last question related to capex, that 5.8 billion guidance. How alert deployed towards Cayman Island from this 580? It will be in phase manner.
Yeah. So we are looking at around 150 crores during this year, because this year will be minimal on Cayman.
So your
already one quarter is gone, so we have got another 3 quarters. So the activity will be a little bit slow in the current year, but we'll start picking up momentum in the next year.
Yeah, so your capex breakup largely is like 580, of which 280 is for India, 100 and 150 is for your Cayman, and remaining is for GCC, largely GCC.
Yeah, that's right. That's right.
Sir. Okay, sir. Thank you for your.
Thank you. Participants, to ask a question, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. We take the next question from the line of Shashank Krishnakumar. Please go ahead.
Hi. Sorry if this was clarified earlier, but any update on the offshoring of back-end operations? I talked about a shared service center in India. So any update on that front?
Amitabh?
Yeah. Can you please repeat the question, please?
Yeah. Regarding the offshoring of back-end operations, so we had earlier talked about establishing a shared service center in India. So any update on that front?
Yeah. So we have done a soft launch for our shared service center out of Bangalore. We already had a presence in Calicut. So we have integrated the Calicut and the Bangalore office. Presently, we have close to 130 people working between Calicut and Bangalore. And we have created a COE model wherein the operations of finance, procurement, revenue cycle management have been, front-ended in GCC, but back-end work is happening out of the Bangalore center.
Okay, thanks. And just the last one on the home healthcare business in India. So how is that progressing, particularly in the Kerala and Bangalore clusters? So any update on that?
Dr. Adish, you would like to say about that, the home healthcare in India?
Yeah. Am I audible, Shashank? Can you hear me?
Yeah.
So, Shashank, the entire home healthcare business was started in a pre-COVID, because we already had a model of continuum of care. But COVID has really given it a big push. And we saw strong growth in the home care business, starting off with the Malabar cluster, where we had 3 hospitals, Kottakkal and Kannur. And currently we are spread across the geographies in Cochin, in Bangalore, Andhra cluster, Hyderabad, Kolhapur. So it's across the network, and it's done fairly well. We also have an interesting model that we leverage skilled personnel, our own personnel within the hospital for extending of care to our own patients. So it has done steady growth over the past few quarters.
Okay. Thanks. That's it.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Yeah, thank you for the follow-up. Just one question on the landscape for the hospitals in UAE. We have seen the news of one of your competitors. The lenders have actually now swapped for equity exposure, and they're looking to turn around. So just want to understand from an M&A, are there parts in that business which is interesting for us? How should we look at the landscape in the UAE?
Yeah. So, we always look at opportunities, and we were also wanting to make sure that we don't increase our debt. So while there were opportunities which were coming, including some of the recent ones, we are now looking at only those which are strategically aligned to our activities in UAE, and which will be coming in not as a whole but as individual hospitals. So that thought process is there. If something comes which is fitting into our present chain of hospitals, we will be looking at that. But then we will make sure that it's not going to have a huge impact on our debt position.
So, Doctor, so if one is not looking at a whole operation and looking piecemeal, what about us doing greenfield in, say, Dubai? Is that an option as well?
I didn't get that question, Shyam.
No, I'm saying, can we open our own hospitals in Dubai now that the competitor is having its own issues? Earlier, there was this understanding. I meant Abu Dhabi, my bad. But the point is, earlier there was this understanding that, the terms are different. I'm just putting out stuff. But, now that there is other issues that...
Yeah, there are opportunities. Even now there are opportunities for greenfield hospitals, and we continuously explore that. But because of COVID and all, we didn't want to increase our exposure and bring in more of the greenfield hospitals. Of course, it also takes time for us to go into break even, and that will have a drag on our margins and all. So we are looking at like what we also mentioned. No, maybe there is an operations and management. If there is an opportunity, that is something without investing further funding, we can look at that. Even a very good EBITDA multiple, if something is available, if the prices are very attractive, maybe we can look at even buying out individual hospitals. Constructing something new, yes, that is there, and we should have a pipeline because we have now 13 hospitals in GCC. We have to, for further growth in future, we have to have that. We already have 2 hospitals which are coming up, and beyond that, for the year 3, 4 and all, we must be looking at greenfield also as an opportunity. So answering your question, yes, we have some amount which is allocated for growth, which can be utilized for, usually we do greenfield, but it can even be used for a small acquisition if that is available.
Thank you, Doctor.
Thank you. The next question is from the line of Charulata Gaidhani from Dalal & Broacha. Please go ahead.
Hello. Hello. Yeah, my question pertains to capex for the full year for FY22 and 23.
Yeah. So FY22, I had already mentioned that it will be around 580 crores. And the year after that, because Cayman is something which is going to pick up, so we are looking at various other options as well to see as to whether it can be funded through other means. But at least in terms of capex, we are looking at a similar number the year after that.
Okay. And this, can you give the breakup of 580? Where all it will go?
Yeah, I had already given the breakup a few minutes back. I'll repeat. So India, we are looking at 280 crores. Cayman, we are looking at 150 crores. And in the GCC, we are looking at 150 crores.
Okay. Okay, fine. And will you be taking debt?
Yeah, so no, I think that many of these things can be funded internally. The capex can be funded through internal accrual. But there could be, during certain intervals when there are cash flow mismatches, maybe for some time there could be a borrowing. But broadly, the way we are looking at it is to fund it through internal accrual.
Okay, okay. And when can the India EBITDA contribute more to by year do you see that kind of level?
Sorry, I didn't get the question. See, let me to your earlier question, there could be borrowings in certain geographies. For example, India, there could be some additional borrowing, but GCC, there will be a reduction in the borrowing. So on a consolidated basis, at least we don't see the debt going up, and because mostly these projects will be funded through the internal accruals. That is the first. The second question, what you asked, if you could clarify that a little bit, so that I'll be able to answer.
Like currently, India contributes 15% of EBITDA. By when, whereas India contributes 19% to sales and 15% to EBITDA. So by what time frame do you see that the EBITDA growth will be higher than the sales growth?
Yeah, so at least in the coming year, we are looking at India contributing more towards the EBITDA in terms of the percentage. So we are looking at anywhere around 24% of the total EBITDA coming from India. So that is in the FY22. So that is our estimate. But we'll have to wait and watch, because it also depends upon how the COVID plays out in various geographies. But that is what our expectations are. And this number over a period of time will continue to keep increasing.
Okay. What are the challenges that you see apart from COVID?
Yeah, so in terms of challenges... Yeah, go ahead.
No. I was just trying to find out, is it a generic question about the overall group or any specific India, or what is that question? Challenges on what? Is it on the India business, GCC business? If in India, on hospital? Yeah.
Yeah, in terms of profitability. Challenges, India, GCC, yeah.
Yeah, Srinath, you can. I thought that it is more general. You can answer.
Yeah, so the thing is that in terms of profitability, the challenges other than COVID could be a major challenge. No one can predict as to what is likely to happen. But only thing is that because we have already seen COVID earlier, and we know that we are able to do better and better over a period of time. So therefore, the challenge of COVID also is diminishing. The other challenge in terms of the financial related thing could be in terms of the economic situation in the GCC. In India, we don't see that as a challenge, at least for us. But in the GCC, if the economic situation turns out to be bad, and if there are significant job losses, then there is a degrowth in the population. So that could have an impact on our business. But we feel that, like what the doctor was saying earlier, so there has been a decline in terms of population in some of the geographies in the GCC. But the current year, there is a pickup in the economic activity. So therefore, along with the pickup of economic activity, especially in the UAE, we have got this 2020, which is now 2021, which is a major event which is going to happen. So therefore, we could see an upswing in the economic activity. But having said that, there is always that risk involved.
Okay. Yeah. Thank you, and all the best.
Thank you.
Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Shashank Krishnakumar from JM Financial Institutional Securities for closing comments.
Thank you, Aster management, for joining us and giving us the opportunity to host the call. Wish you all the best and have a good day.
Thank you very much. Thanks a lot to Shashank and the whole team. Thank you very much. Thanks a lot.
Thank you.
Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of JM Financial Institutional Securities Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.